Hey guys, it's Frank from Altcoin Buzz. So 3 weeks ago, I gave you the How High Will Chainlink Go video. And now I want to, first of all, recap what happened in that video. And then, of course, we are going to do an updated analysis on Chainlink because, of course, it has since reached new highs. And most of the video, of course, will be an analysis. At the end, I will give you my conclusion with a potential trade setup, including supports and resistances, in the same way as I did in the previous video over here. The reason for this was that this was between the 0.5 and the 786 of this big wave, which started on about the 9th of July when the volume really started picking up. Now, in this video, my general prediction was that this blue box would provide support and the red box would provide resistance. Now, if you look at the support and resistances, when I made that video, the price was $7.1, I think. That's right, $7.17. That was back here on the 13th of July. And you can see that we reached this red box. We didn't actually get within the red box, but we resisted just below this red box. And we had quite a solid pullback of 27%. And then lo and behold, we found support in this blue box. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. And this video also illustrates a very important point about technical analysis, which is that things can change very quickly. So this support box was created based on the fact that it was between the 0.5 and 0.786 Fibonacci retracement zone. Now, at that point, when this video was made, the previous high was at 8.5. So what I did in that video was that I drew a Fibonacci retracement between the $4.7 level and the $8.5 level. And as you can see, this 0.5 and 0.786 lines up with this box. I actually drew the box a little bit higher at the 5.66 level because this represented the previous low on the daily at $5.7 over there. Now, if you were to simply go by this box without doing a further analysis, you might be a little bit disappointed to find that the wick only just came at the very top of this box. So if you had your buy orders laddered in this box, like I suggested in the video, you would only have gotten very few of them filled. But if, however, you had have done an updated analysis once we reached this high of $8.9, you would have seen that this box, which I suggested to draw between the 0.5 and 0.786, would now have had a lot more of your orders filled. Any orders between the $6.83 level and the $6.5 level would have been filled. Now, I must admit, I did not get into this trade. I wish I had of. The reason was that I was just very busy doing other things. I was in some other trades at that point in time. And also, I was a little bit concerned about the weekly RSI of Link, which seemed pretty high, suggesting to me that even buying in this box might be a little bit risky. I generally don't want to buy coins which have overbought RSI, as Link does. And again, in this video, I talked about the $8.9 level to the $10 level, with the most likely specific level being at the 9.3. We retraced actually at exactly the bottom of that box, as I said, at the $8.9 level. But now what's interesting is that we've had a retracement and another move up. So let's see what's going on over here. Okay, so I'm going to start by doing a very basic Elliott wave analysis. Okay, so let's start on the daily time frame and see where these possible waves might be. I'm going to assume you have some basic understanding of Elliott waves. So let's just assume that the wave started here. This is obviously a very important bottom. It's likely that a new wave started here. So the way I see this is that we have the most likely first wave starting here, second wave correcting down here, third wave going all the way up there, which is a very long wave. The fourth wave correcting somewhere around here. The fifth wave up here, and then an A, B, C correction down here. So that would be the first wave of this structure. And then in addition to that, I'm going to draw another wave, which would represent the third wave of this big structure, which would have a 1, 2, 3, 4, and then looking for a 5 somewhere here. And then looking at the bigger picture, we would have a wave going from here. This would be the first wave, which represents the 1, 2, 3, 4, 5 up here, the second wave correcting to down here, and the third wave, 1, 2, 3, 4, 5, going somewhere here, with the fourth wave correcting, we don't know yet where, but it cannot be below the first wave, and then the fifth wave, of course, coming somewhere much higher, also we do not yet know where. So in this video, we're going to try and figure out where this third wave might likely correct, and in order to do that, let's draw some Fibonacci extensions. So again, assuming that this is the bottom here at $1.4, and then assuming this is the end of the first wave and that we have a correction down to the $3.6 level, we would have a fifth wave extension target at the 2618. So let's just draw a red line right there. That would be at the $12 mark. So in terms of Elliott wave extensions, the 2618 is one important level. As you can see here, we also have the 200% level, the 323 and the 423.6. So the 200 level would have us correcting at exactly this psychological level of $10. And just for the sake of argument, let's put the 3236 level as well, although I personally don't think we will get there before having another notable correction. Okay, so it's worthy to note that fifth waves in Elliott wave theory are very hard to calculate. And right now we are entering the fifth wave of the third wave of this large structure. So despite it being hard to calculate, I couldn't help but think that some of the things they say here apply to the market right now. So in the fifth wave, the news is almost universally positive and everyone is bullish, that's for sure. Many average investors finally buy in right before the top. I've seen on Twitter people talking about how they're FOMOing into the top of Link. And you know, hey, if you have a stop loss, all right, fair enough. But if you don't, and I think most of these average investors do not, then this is probably not the best time to buy. Then they also say that volume is often lower in wave 5 than in wave 3. So have a look at this. Wave 5 started here on the 26th of July, and you can see that the volume between the 26th of July and the 5th of August is not quite as high as it was during wave 3. Between the 28th of June, maxing out with the highest volumes in mid-July. So assuming we don't see volumes higher than we saw for the third wave, this would offer further proof that this is indeed the end of the fifth wave, somewhere around here, and that we would be looking for a correction from there. And of course, they talk about many momentum indicators starting to show divergences. Now, while we don't have many showing divergences, have a look at this. This is the 3-day chart on Binance. You can see that the 3-day has a lower low on the RSI, but a higher high on the price. So this is a classic bearish divergence. And note, this is a 3-day chart. This is no lower time frame chart. The longer the time frame, the higher the time frame, the more powerful, the more notable, the more trustworthy these bearish divergences are. And of course, the MACD is also registering lower lows on the histogram. And then finally, they say the wave 5 lacks huge enthusiasm and strength found in the wave 3 rally. So the rate of power or strength inside every wave 5 advance is very small when compared to wave 3 advance. So if we take that into consideration and draw a fib extension of the third wave, which started here on the 26th of June, and extend that up to the end of this third wave, down to the fourth wave, to see what the fifth wave might give us, then we can see that a 1-to-1 extension would take us all the way to $11.18. So this analysis in and of itself would suggest that we are unlikely to cross this level of $11.1 before having another notable move down on this 3-day time frame. And in addition to that, what is also somewhat likely is that we correct at the 786 of this third wave, which would have us correcting at the $10 psychological level, which again, as I mentioned, is the 2-to-1 extension of the first wave of this massive structure. So this already gives us some confluence at the $10 level. Now, in addition to this confluence at the $10 level, this also gives us confluence, incidentally, at both the other levels that we found up here at $12 and at $14. So since this is all starting to get a little bit complicated and sort of very technical, I'm going to try and break this down into what I think is the most likely scenario moving forward. So to do that, I'm going to start by assuming that we don't get anywhere close to the $14 level before having a notable correction. That is in part due to the fact that we have the bearish divergence on the 3-day, in part due to the fact that on the 1 week we are already overbought, and in part due to the fact that this move has already been pretty insane. We've had a 650% move. To assume that this is going to go to $14 for 1,000%, it's possible, but for such a large cap coin, I don't think that's very likely to happen without a correction first. Not to say that we will never reach this level, certainly we could, but I assume that we will have a correction before we reach that level. Okay, let's go back to the 3-day time frame now. So we've taken out that $14 level as a potential resistance. So now the way I see it is that the most likely resistance area or zone is in this box. Now this of course is a very large box, but very briefly what I can say is that obviously the $10 is going to be a psychological level to watch out for. It's quite possible that we don't break this $10 level. If we do break it, then the next major resistance zone would be, I would say, between the 11.0765 and the $12.1 level. So I wish I could give you guys a trade setup here, but honestly, there's too much uncertainty. We are very close to this $10 level. And secondly, we have not come down to any notable support, so there's no strong reason to be buying at this specific level, considering that we do have notable resistances on the way up. Okay, so in terms of price predictions, first of all, for resistance, I'm going to say that $10 is a potential resistance, and the next major resistance would be between the $11 and $12 level. And I suspect there's a very good chance that we will see, at the very least, a sort of 10% correction from one of these levels. A 10% correction from the $10 level would take us down to the $8.8 level. A 10% correction, let's say from the middle of this box, would take us down to just above $10. Now, as I mentioned, I am not keen about buying into Link. There are many other coins which have potential entries which look much more attractive to me. And the reason, again, is because the RSI is overbought not only on the larger time frames, but also that we have bearish divergence on this 3-day time frame. For me to be really interested in buying this, I would want to wait until the weekly time frame was not overbought at the very least, so that we have a move down at least to this 70 level. That would suggest to me that the overextension has cooled off and that we are ready for another move up. In addition to that, I would want to wait for the weekly to touch this orange line. So let me give you a potential scenario of how that might happen. So you see this orange line here, which represents the 21 EMA. I wouldn't be surprised if it continues its uptrend, but then starts slowing its growth and that we come down to correct here. Of course, this would represent the previous low of $6.5, but it could also just sort of go on like this. And then, we could find a support somewhere over here. The point is that I would want to wait for this to come down to this level before getting in for another move up. It's just a little bit too overextended for my personal preference. That being said, if you're holding, there is no real strong sign to sell yet. I would personally be taking some profits around this level, but really I would only be doing that if I had an intention to get back in at some point as well. So guys, that's been it for me for today. I hope you liked this video. In the previous Chainlink video, we talked about the Chainlink distribution. We talked about the concern about the supply distribution, something which is very worthy to note, that the developers own a very large percentage of the tokens, and I don't think that they would be waiting much above $10 to sell this. But that being said, I don't think that they're trying to dump the price either. I think they're just steadily selling as the price goes up and up. That would be the most rational thing to do, as opposed to sort of waiting for really extreme highs. But with that being said, guys, let me know down in the comments below. Have you been trading Link? Are you still hodling Link? Are you waiting for a pullback? What did you think of this video? Let me know down in the comments below, and don't forget to smash that like and subscribe button if you liked this video. Alright guys, I will see you in the next one.